here is the approach I want you to think about. So when we talk about Form 8962, obviously we are speaking about premium tax credit. And I want to show you, the first thing I want to show you here is, as you can see on the screen here is Form 8962. So basically, you gotta, if you really get this tax credit, you gotta put your first name, last name. You gotta put your social security number, very important. You always have to put your information on top of the form. And part one is pretty straightforward. So part one really is concerned about the composition of your family situation right now. So here it's asking you for your tax family size. So again, I want to insist on the fact that we are speaking about your tax family. I mean, your regular family or your biological family or whatever name you want to can have a different size. But here, the IRS cares about your tax family size. So we put 4. And you got to put the modified AGI, adjusted gross income. So here we put 100 grand, and you have to put if you have dependents and those dependents have a modified AGI, you have to put it here as well. So when you add those two, on line 3 you have 150, and so the federal poverty line here, our number is 30,000, and everything comes to 500%. So when you divide 300, when you divide 150 by 30, then you have 500%, 5 times. And the applicable figure here is 0.0850. And those numbers are on another form you have to, I'll show you later on. And line 8A is pretty straightforward, the annual contribution. So when you multiply line 3 by line 7, that's what you have. And 8B, you have $1,063. I want to show you here. You can see part 2 is pretty straightforward in terms of the annual totals. Again, we are speaking about the premium tax credit, and so the annual totals actually amount to $5,000. Again, we are speaking here about our hypothetical situation. And line 24, 2,500, line 25, 1,000, and line 26, $1,500. Okay. Now I want to show you the next screenshot here. When I was speaking to you earlier about the federal poverty line. So the federal poverty line, that here is a website you go to get that data, healthcare.gov. And I want to show you another screenshot here. This is basically how I got the 0.0850, and I got it from this Form 8962 instructions. So you got to go to that form and to the instruction side of it, and really look for the figure that corresponds to your situation. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. I want to talk to you about part 4 now. So part 4 actually is concerned with the allocation of policy amounts. So this is actually a supplementary data set. So we are speaking about allocation 1, 2, 3, 4. If there are more, you're going to have to actually indicate that on a separate sheet. But this basically tells you a little bit about the allocation percentage applied to monthly amounts. This is kind of important to actually calculate your premium tax credit. And this is kind of important. And one thing I want to say here is that everything revolves around your family composition. Again, I'm speaking here about your tax family. We're not speaking about your biological family or your like any other family composition. We're speaking strictly about your tax family composition. So the allocation is important because in the end, it helps you calculate the premium tax credit you could qualify for. And so that's part 4. Now let's move on to part 5. So part 5 actually is about the alternative calculation for year of marriage, and this is actually will apply to your situation if you have a different family composition. So it's one of those things where if you have questions specifically to this part, please let us know in the comment section, and we'll be able to give you all the details. It will take too long for me to actually cover this in about 15 to 20 minutes. This is why I'm just showing you what the form looks like. And so if you are actually filling out Form 8962, you might have to fill out this form, Part 4 and Part 5, depending on your situation. So when we talk about the alternative calculation for year of marriage, this actually revolves around the alternative entries for your social security numbers and also for your spouse's situation as well. So everything goes both ways. It's all about your situation, but also your spouse's situation. And this assumes that when you file for the premium tax credit, you are filing jointly. You're not filing single. You're not filing married or filing separately. You are filing jointly to actually be able to avail yourself of the premium tax credit. One thing I want to say, and I will end on this section here, is that when you actually are claiming some refunds, make sure that you have the proper receipts, just in case, because the IRS has been adamant in the last few months to always request receipts in some cases. So this is important. By the way, boss, I want to quickly I want to remind you of today's topic. We are having a conversation about the Form 8962 Premium Tax Credit. Let me quickly talk to you about our pro tips here. So when we talk about Form 8962 Premium Tax Credit, it's important to really understand that the premium tax credit is a valuable financial resource that helps eligible individuals and families afford health insurance through the health insurance marketplace. And this was really important, especially during COVID, where a lot of folks all of a sudden were really concerned about their health insurance situation. And Form 8962 really played a big role in that period. And after COVID. So when we talk about premium tax credit, now the premium tax credit, the PTC, is a refundable tax credit intended to make health insurance more affordable for people and families with moderate incomes. Okay, and it was actually established under the Affordable Care Act, and to help make healthcare more accessible and affordable to those who purchase coverage through the health insurance marketplace. So if you are actually purchasing insurance, if you're purchasing coverage through the health insurance marketplace, you will be interested in knowing more about the premium tax credit. Now, if you have private insurance, or if you have insurance through your employer, then you really don't need that. Now, to qualify for the PTC, you must meet specific criteria, including income limits and not being eligible for other qualifying coverage such as Medicaid or employer-sponsored insurance. And the amount of the credit is based on a sliding scale. You saw that a little earlier, taking into account household income and the cost of health insurance premiums in the marketplace at any given time. Okay, so the thing is that who is really eligible? You have four things that the IRS is looking at to ascribe eligibility. You have income, you have coverage through the marketplace, you have ineligibility for other coverage. In other words, you're not eligible for Medicaid, employer-sponsored insurance, or government-sponsored plans, and also your filing status. So the premium tax credit is available to individuals and families who file their federal income tax return using one of the following statuses. You have single, married, filing jointly, head of household, or qualifying widower with a dependent child. So if you are married, filing separately, you will not qualify for this PTC. When we talk about PTC qualifying for the premium tax credit, there are cases where you might have a change in circumstances, and the law has actually put in place a series of arrangements to make sure that you can still qualify for the PTC should you experience a change in your personal circumstances, in your family circumstances. So by immediately informing the marketplace of any changes in circumstances, you will enable the marketplace to amend the data used to calculate your anticipated premium tax credit amount and modify the amount of your advance payments. Okay, so it's important to really understand that whenever you have a change in circumstances, you have to notify the marketplace ASAP, because the risk of a major discrepancy between your advance credit payments and your actual premium tax credit will be reduced as a result of this modification. And you want to do this modification as soon as possible. Now, let me give you a series of circumstantial changes that may have an impact on the amount of your actual premium tax credit. It's all about anticipation. It's all about really managing those changes and making sure that those changes do not have a significant impact on your finances in terms of your actual advance payments. Okay, so again, I want to give you a series of circumstantial changes that may have an impact on the amount of your actual premium tax credit. So if you have an increase or decrease in your household income, Social Security payouts in lump sums, including Social Security disability insurance, lump sum taxable payouts from a retirement plan or individual retirement account, cancellation or forgiveness of debts such as credit card debts, marriage, divorce, birth or adoption of a child, other changes to your household composition. Again, I want to go back to what I said earlier. We are speaking about your tax family size, your tax family composition, okay? And gaining or losing eligibility for health insurance provided by the government or an employer. Let's say you got a new job and thank God, your new job is giving you extraordinary insurance. Then this is a change in circumstances, and also moving to another address. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8962 Premium Tax Credit. I want to talk to you about the PTC calculation, because the thing is that when we talk about PTC, of course, we are speaking about advanced payments, and also we are talking about the advanced credit payments as well. So the amount of premium tax credit is typically equal to the premium for the second cheapest silver plan offered via the marketplace that actually covers the members in your coverage family. Again, coverage family, tax family, okay? And so this is that less a predetermined portion of your household income. However, the credit itself, referred to as your enrollment premiums, cannot exceed the premiums for the marketplace plan or plans which you or your family register. Okay, for that. Now, the members of your family who have signed up for the coverage through the marketplace and are not qualified for non-marketplace coverage like Medicare, Medicaid, or reasonably priced employer-sponsored coverage make up your coverage family. We're speaking about your tax family. Very important. So when we talk about filling out this Form 8962, you basically have a series of steps that you have to go through. It's very methodical approach to really maximize your ability to get a premium tax credit. So you want to gather the necessary documents, and you have to complete part one. I showed you a little earlier, right? So when we spoke about annual and monthly contribution amounts, so at least you have a clear idea what's really happening here. And the next step, you have to calculate the premium tax credit, and it's one of those things where you have to have a clear idea of how much you could actually qualify for. And you also have to compare advanced credit payments. So if you have received advanced payments of the premium tax credit throughout the year, you will need to actually complete this part 3. And so the next step here is you have to complete the part 4 and part 5. I showed you a little earlier when we spoke about part 4 and part 5. Basically, this is first of all, part 4, it actually helps you allocate the premium tax credit among household members if you're filing jointly, while part 5 is for any additional information or explanations you need to provide. And so that's it. You have to double check everything and then submit. Not a problem. Just make sure everything is entered correctly. So when we talk about Form 8962, obviously there are consequences if you actually submit data in error, and it's one of those things you do not want to have that. So there's a couple of possible errors that can actually creep into your data. So we have incorrect tax liability. This is a possibility. Okay, you have tax penalties and interest. So if errors on Form 8962 lead to underpayment of taxes, the IRS may assess penalties and interest on the unpaid amount, and penalties can vary depending on the severity and intent of the error. So it's important, the severity and intent. So intent means if you intentionally put the error there, like you lied about the stuff, then the consequences are much larger. And whereas if the error is kind of small and unintentional, then the IRS might look at it and might assess a smaller penalty. Also, you might have delayed tax refunds. So if the IRS identifies errors on your form, it may delay the processing of the tax return and any associated refund until their issues are resolved. Okay, so that's why you want to really pay attention to everything you're doing, because if you have a delay in tax refunds, this can really affect. This can be frustrating for you and other taxpayers. So it's one of those things where you want to really stay away. So you might also have, there are also consequences in terms of increased scrutiny and also loss of future eligibility. So increased scrutiny is really important because Form 8962 and the premium tax credit are subject to scrutiny by the IRS, particularly due to the potential for fraud or abuse. I mean, when we talk about the insurance through the healthcare marketplace, in the past we've seen throughout the country, some quote unquote bad actors were trying to really game the system. So the IRS has put in place a series of controls to make sure that the system is not rigged anymore. So errors on the form may trigger further examination by the IRS, leading to additional requests for documentation and potentially an audit of the taxpayer's return. And you might have a loss of future eligibility. So if errors on Form 8962 results in intentional misreporting or fraud, it can have serious consequences beyond the current tax year. And you, as a taxpayer, you may lose eligibility for the premium tax credit in future years, and you may face legal consequences, which you do not want anyway. So always important to carefully review and accurately complete Form 8962 to avoid all the consequences that I just gave you. Now, the thing here is that as you're trying to really file Form 8962, let me give you a series of scenarios that could actually happen to you. What should you expect when claiming this PTC? You can have a tax refund or reduced tax liability. Remember, it is a tax credit, which means it is actually reducing your tax liability, or you can get a refund from the IRS. And reconciling advanced credit payments is also a great tool throughout this process. Changes in circumstances can also help you out, and also you have potential tax implications. Okay, and so when we talk about the PTC, there are also deadlines and due dates to be aware of. Now, basically, Form 8962 is generally due by April 15th, which is the same date where your 1040 is due. And also, there could be some extension of time. So if you need more time to file your tax return as well as Form 8962, you can request an extension by filing Form 4868, application for automatic extension of time to file U.S. individual income tax return. So basically what happens here is that you're getting 6 additional months to file your tax returns, moving the deadline to October 15th. So from April 15th all the way to October 15th, okay? And you also can have an amended return. So if you need to make changes or corrections to your Form 8962 after you have already filed your tax return, you will need to file an amended tax return using Form 1040X. Okay, so 1040X is called the amended U.S. individual income tax return. So the deadline for filing an amended return is generally within 3 years from the original due date of the return, or within 2 years from the date you pay the tax, whichever is actually later. So it's kind of important. Bottom line here is that depending on your situation, you can actually let us know in the comment section. You can ask all questions that you have, and please just let us know the state you're actually are commenting from, as well as your family composition, so we have a clear idea how to direct the comments, how to direct our answers. So yeah, you can just let us know in the comment section, ask any questions, or you can actually reach out to a professional to kind of help you out, a CPA, an EA, or a tax attorney to kind of look at your situation and help you out. So much for your attention. I really appreciate it. Let me quickly do a recap here. So in today's conversation, I spoke to you about Form 8962. So I gave you the approach, the pro tips, and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.